Hello, everybody, and welcome back to another episode of the Daily Crypto News. Bitcoin right now almost at $9,000 and XRP just under 20 cents. And today has actually been quite a good day for crypto. We're up roughly 5% on most coins. So if you guys are enjoying these daily crypto updates, please support the channel by pressing the like button and subscribing. And the question of today is, imagine waking up with 100 million XRP in your account. Well, to me, I think the question is better. What if you were to wake up with $1 million right now? What would you do with it? What would you buy? Would you go and invest? Would you go live your life or retire? What would you do? Let me know in the comment section down below. I think it's really interesting to see how everybody thinks of something different from the point that they get the money. I think that's something really kind of cool. So I would probably just go ahead and invest it and stay doing exactly what I'm doing right now. But let me know in the comment section down below. First of all, a tweet from Ripple. They said, our data team crunched the numbers and evidence shows that users are shifting to XRP for exchange balance transfers to avoid network congestion on Ethereum and Bitcoin. New on the Spring Developer blog, yada yada yada. So a new research came out from Yu Wang, and that revealed that when blockchain networks become congested, XRP is used to exchange balance transfers. And basically, we've noticed a lot of issues with Bitcoin and Ethereum. And one of the most simple ones to see and investigate is that it's just really a bottlenecking issue that they have. And I mean, Ethereum 2.0 is around the corner, but it's not yet there. And as it stands right now, it's just really difficult to get a lot of transactions going on Bitcoin and Ethereum. And when the network is really busy, yeah, you're going to see some congestion. With XRP, that is nearly impossible. I'm not going to say it's impossible, but it's nearly impossible and very freaking difficult to achieve. And thus, since it's the third coin, I mean, it's the next follow-upper from Bitcoin and Ethereum, yeah, a lot of transactions will flow through XRP because it's a lot more convenient. Sounds logical to me as well. Cryptomaniac posted on Twitter, Ripple XRP was created by the same people who control the banks and the world for that matter. Ripple is not just some random company that came out of nowhere, it is much bigger than it seems. People in control of Ripple control the regulators. Price first, then regulations. All right, so a little bit of history. 2009, Bitcoin is invented, which is the first blockchain. I mean, yeah. 2012, Ripple is born, first currency agnostic blockchain. 2014, R3 Consortium is born. 2015, IOP, which is Interletter Protocol, is invented. Ethereum is born, Hyperledger is created. 2016, SBI Ripple Asia, Japan, is born with the first DOT banking network called Ripple GPSG. 2017 to 2020, which is right now, Ripple becomes the standard for international money transfers between banks. At least, that's what we're kind of hoping for. At this point, I would definitely state that Ripple is not the standard. However, there's a lot of opportunity for it, and we're all hoping at least that it's going to get there. IOP becomes the standard protocol for connecting banks' cash ledgers as a part of Ripple's software. Again, a little bit of a hopium ordeal, but some are hoping that will happen all this year. But I still know it's not standard at all, but all right. 2020 to 25, blockchain solutions for capital markets and trade finance emerge. R3 Corda, DAH, Fabric, etc. IOP Java becomes the interoperability standard for Hyperledger Foundation projects. And then 2025 to 2030, blockchains and distributed ledger solutions mature and all assets exchange networks become interoperable with IOP. And then the second one, cross-border real-time gross settlement. A little bit of a kind of a back knowledge type of scenario or type of slide, I would say. You can see all the local payments into the RTGS systems, Interledger Protocol connecting everything together through the XRP ledger. The global RTGS will remove friction, costs, and risks from cross-currency transactions. Distributed ledger technology, and in particular the XRP ledger, will enable banks to settle cross-currency transactions in real time, something that is impossible at this date. The XRP ledger can be accessed by all the banks and liquidity providers, which is going to be very difficult to get to, but that's the goal eventually. Enabling healthy competition between banks and a better service for customers, because all those banks are of course going to want the best type of technology that's out there, the fastest. However, they all don't trust each other, and Ripple's going to be acting as an intermediary. And since they're all competing with each other to get the best thing and working, the consumer is going to benefit the most from that, as we're getting the benefits only and not the competition itself. And even if we do get anything from the competition, it's just going to be in terms of something profitable or positive for all of us customers. Correspondent banks and liquidity providers will be able to reach more currency corridors and new customers, improving their service offering for other banks and their clients. And then the Interledger protocol will enable financial institutions and central banks to make their existing infrastructure and process interoperable with other currencies, asset classes, and the XRP ledger, the global liquidity marketplace, and the global decentralized RTGS system. And a little bit more on that right here. This is for 2025. This is also for 2025. Okay, so this is what we're hoping to get to, right? With the story before. Yeah, pretty damn cool, guys, if you ask me. But it's just a little bit of a question of whether or not we can get there. For right now, it's a little bit of a dream scenario, I would say. It's really the most optical case. And I think to make his point a little bit more clear, he could have actually explained some of the investors in the series for Ripple. So some of the investment series include Google Ventures, for example, and a couple of these big venture capitalists who've also, I guess, just put money in some of the best projects out there. And we kind of relate it to that side by saying, they're not going to let this project fail just like that because they've spent, millions, hundreds of millions of dollars on it. Yeah, that's something you could, I guess, say as well. But he didn't add that, which is a little bit of a bummer in my opinion. Wallet termination option brings Ripple XRP average of 40 account deletions a day. Thanks to the voting consensus reached among the XRP community, well, not really the community, really the core validators, or I guess the nodes, the people with money, or at least the people who run a node. I think most of the community doesn't do that though, so I don't know. But yeah, after a voting consensus reached, the XRPL team instituted a deletable account feature for users to terminate their wallet on XRP network. The account termination option turned out to be as successful and useful for users as the community accepted the feature with pleasure, and since then people have been using the feature effectively. As revealed by XRP Scan in a statement today, May 12th, the deletable accounts amendment has so far resulted in an average of 40 deletions a day since it was established. XRP Scan made the revelation with a graphical illustration showing the number of accounts that have been dismissed by users in the last 3 days. As illustrated in the chart, 52 accounts were deleted on May 9th, a day after the feature was deployed. A little below 40 was done in the next day, and yesterday, May 11th, about 48 accounts were terminated. The result shows that a number of XRP wallet users have accounts which they have been obsolete for some time, but they were earlier left with the option of leaving the account to lie fallow. One XRP user commented on the update stating that he owns 10 of the accounts that were deleted. So, all right, like saying 40 is a little bit on the high end because one guy could have deleted, 45 of his own accounts. And if only one person did that, it would still look like a lot if you think about it. And yeah, this is all, I guess, all known info already a little bit. This is about the process of deleting an account and what it does and kind of how it works and how it got into place. But we covered that, I believe, twice already in the last couple of videos. Bitcoin might have a surprise for you. Bitcoin might have a surprise. Well, Bitcoin halving turned out to be the opposite of what the consensus was hoping for, but the consensus is wrong most of the time. The FOMO was priced in, and as we got close to the halving, the big players dumped on the retail traders. So what could the retail traders have done? At the very least, they could have bought the rumor and sold the news. It was very unreasonable to expect Bitcoin and USD to rally after the halving, and we constantly warned against a major crash. This is certainly not that major crash, as it has yet to be seen, and we are very close to it. For now, the sentiment remains overly bearish, and many analysts and traders are expecting Bitcoin to decline down to $6,000. The problem with that is that too many people will once again get on the same side this time, which will create another honeypot for the market makers and whales. During the recent crash, more than $200 million worth of long positions were liquidated, and we now have many bearish positions stacked up that could be shaken out in the near future if the price of Bitcoin rises up to complete the right shoulder of the HNS formation that we see on the chart. And now a little bit of traditional finance. The S&P 500 has faced multiple rejections at the 61.8 FIB retracement level and is now eyeing a sharp correction. The euro to US dollar forex pair is also hanging by a thread, and it is only a matter of time before we see a major move in both these markets. The near-term outlook indicates that we might see good days for the US dollar up ahead, with the dollar currency index surging to new yearly highs. As for Bitcoin and the rest of the crypto market, this year could turn out to be devastating. Now that Bitcoin dominance is eyeing a massive breakout to pre-2017, we can expect carnage in the crypto market in general and altcoins in particular. Quantum computers could crack Bitcoin by 2022. Quantum computers could one day be used to crack the encryption of cryptocurrencies like Bitcoin, and that day could come sooner than anticipated. In brief, a 4,000 qubit quantum computer could theoretically crack Bitcoin's encryption in a matter of seconds. The current generation of quantum computers max out at 54 qubits, and a quantum computer capable of cracking Bitcoin's encryption could be just 2 years away. So first, it was speculated that it was going to take another 40 at least years, or some even stated another 2,000 years to ever get to 4,000 qubits. However, some new guys are saying it will only possibly take 2 years. And personally, I don't have the real insights. I can't tell you what of all of this is true because, of course, Google, would like people to think that they're really superior in all of this, and they would like people to think that it's all very, very close. However, we don't really know, right? Here they're saying it's too early to call things until NIST makes its judgment, which Chang predicts will be as of late 2022, which is when we'll get a little bit of a verdict on all of that. However, for right now, I would say don't worry about this at all. I'll also mention again in my 5-minute crypto video, and again, link for that is in the description, just so people know about it. However, I don't think we should be worried about it at all, as I see the chance of this happening pretty small. But I'm not an expert, so I think that's a little bit of a bummer. Billionaire Chamath Palihapitiya on Bitcoin. You're going to wish that you just bought 1% and just kept it. Bitcoin is able to stand out as a non-correlated hedge against other assets, according to Chamath. He says, or at least they're saying, Paul Diddy Jones gets it, and Crypto Dad has a show of hands. Well, Chamath Pali has once again spread the word about Bitcoin on CNBC's Shulk Box by promoting it as a non-correlated hedge. To quote, however you think about it from a classic economic theory or the schmuck insurance where you're somewhat skeptical of established governing masses, it is important that we have a hedge, a non-correlated hedge. Yeah, and on Squawk Box they quoted, now, all of a sudden, even he, Paul Tudor Jones, is looking at Bitcoin, and the reason is because we are in this massive deflationary spiral, says Chamath. I still struggle to find anything that is uncorrelated to anything else and to everything else than Bitcoin. And I'm also in that same boat. I would say right now the best option is still Bitcoin. I would not know what to go for otherwise. But yeah, I think it's pretty cool to see all these billionaires hopping in as well. It's pretty damn nice. JP Morgan provides banking services to crypto exchanges for the first time. Again, more on this going to be covered in my 5-minute crypto video, so make sure you check that out. And Monero price analysis, excellent breaks hired to break the 4-hour 55 EMA. Monero is one of the outperformers in crypto space today on Tuesday, rising over 9%. 0.06 has been used as a support once again, and the bulls have now taken the 4-hour 55 EMA. A lot of you guys said to talk about XLM, so again, if you guys want more about that, let me know. And here, just to explain it a little bit more, JP Morgan Chase and Co. has for the first time provided banking services to the crypto exchanges, according to a report by the Wall Street Journal. Two unnamed sources familiar with the matter revealed that both exchange accounts were approved in April, with transactions now beginning to be processed. While America's largest bank is not handling crypto transactions on behalf of the exchanges, instead processing dollar transactions for US-based clients and providing cash management services, the development marks a significant moment in the crypto history. And I think, we again can't hop on this too simply just quite yet. JP Morgan is really quite against crypto, and it's from unnamed sources. However, it did get onto the Wall Street Journal, so it's a little bit of a 50-50 right there. Since the sources are not named, it's not verified. However, it comes from a credible source. That comes from an uncredible source. It's a little bit of a difficult one, a sticky one. But we're going to be seeing it as it rolls out. We will be hearing more about this if it gets confirmed a little bit more. But that was it for this video. Hopefully you all enjoyed it. Bitcoin's still really close to $9,000. Do you think it's going to fall, or do you think it's going to thrive? Let me know in the comments down below. See you guys again in another crypto video. Take care, everybody, and have a very, very nice day.